All right, ready to dive into something that maybe doesn't sound super exciting at first glance? We're talking journal entries.
But they're really fascinating once you realize how much they tell you.
Right, like it's the DNA of a business. Unlocking that code, well, it's the key to understanding the whole financial story.
Absolutely.
Yeah.
And that's what makes them so powerful, not just numbers on a page. Journal entries they're the foundation.
Okay, so let's get specific. We're going deep on a recent article.
Yeah.
It's called Unveiling the Power of Journal Entries, published on Medium just this month by Meritorious Consultants, LLC.
Great piece. Really breaks down the whole system of double entry bookkeeping.
So this guide, it's great even if you've never taken an accounting class, you
Yeah.
know?
Anyone who wants to understand how businesses track their money, this is a great place to start.
Okay, before we get lost in the weeds, let's start simple. What exactly are journal entries? I have to admit, I've always been a little intimidated by the whole accounting thing.
I get it. It can seem like a foreign language, but it's really just a system for keeping track of every financial event that happens in a business.
Okay.
And each journal entry, well, it's a record of one of those events. Think of it like a diary, but for money.
A financial diary.
Yeah.
I like that. So every time money comes in, goes out, or even just moves around within a business, there's a journal entry for that.
Exactly. And what makes this really powerful is the double entry bookkeeping system.
Yeah.
It's all about balance. For every action,
Yeah.
there's an equal and opposite reaction.
It's like every financial move has a counter move, almost like a cosmic balancing act. It's starting to make more sense. But what does that actually look like in practice?
Okay, well, every journal entry has a specific structure. It starts with the date,
Okay.
then what we call the particulars. That's just a short description of what happened
Got it.
and which accounts are involved.
Yeah.
Then there's the ledger folio, which is like a unique ID number,
Oh.
kind of like a fingerprint for that transaction.
Mhm.
It helps you find the full details in a bigger record called the ledger.
So it's like you have this massive book that keeps track of every financial thing that happens, and the ledger folio tells you exactly where to find the story of a specific transaction.
Exactly. And then, of course, you've got the most important parts, the debit amount and the credit amount.
Right, right.
Those numbers represent the two sides of that balancing act we were talking about.
Okay, this is where I always get tripped up, debits and credits. Can you demystify those a bit?
They do have a bit of reputation, don't they? But think of them like two sides of a coin.
Okay.
A debit increases an asset or an expense or decreases a liability or equity. On the flip side, a credit increases a liability or equity
Got it.
or decreases an asset or expense.
So it's not that one is good and one is bad. They just represent different directions of financial movement.
Precisely. It's all about showing which side of the equation is affected. And because of this double entry system, they always have to balance out. It's how we make sure everything stays in equilibrium.
It's like a checks and balances system, making sure things are always in harmony.
Exactly.
So how do you know which account gets debited and which gets credited? Is there some secret formula for that?
There is. It's not a secret, though. It's called the golden rules of accounting.
The golden rules. Okay, now we're talking.
There's rules. They help us figure out which account gets debited and which gets credited,
Okay,
all based on the type of account.
gotcha. I'm betting even experienced accountants need a reminder sometime.
Oh, for sure. They definitely make things simpler. So the first golden rule, that applies to what we call real accounts. Those are tangible assets.
Tangible assets, meaning you can actually touch them.
Right. Like cash, machinery, inventory.
Oh, okay. So like a business buys a brand new 3D printer, that would be a real account.
Exactly. And the golden rule for real accounts is pretty straightforward.
Yeah.
Debit what comes in, credit what goes out.
So if they paid cash for that 3D printer,
Yeah.
you debit the 3D printer account because it's coming in and credit the cash account because it's going out.
You got it. It's all about tracking that flow of value.
Ah,
All right, now we've got the second golden rule. This one applies to personal accounts, and it's all about the people and entities a business interacts with.
like customers, vendors.
Exactly. Customers, suppliers, lenders, all that.
Oh,
Yeah.
okay. So it's all about the give and take of doing business.
Yeah. The golden rule here is debit the receiver, credit the giver.
Okay.
So, for example, when a customer pays you, you're receiving cash, right?
Yeah.
You debit the cash account. The customer's the giver, so you credit their account.
Okay. That makes sense. It's like a little dance between the
Yeah.
accounts, always balancing.
Always balancing.
But what about things that aren't so tangible, like expenses and income? Where do those fit in?
That's where the third golden rule comes in. This one is for nominal accounts.
Okay.
These deal with expenses, incomes, gains, losses, things that are temporary, reset at the end of each accounting period.
Okay.
And the rule here is debit all expenses and losses, credit all incomes and gains.
Okay, so when a business pays rent, we debit the rent expense account and credit cash because the money's going out.
Exactly. You're getting the hang of this, you're natural.
You make it easy. Before we get too deep into examples, though, there's one more thing I've always been curious about. The whole cash versus credit thing. Can you just break down what that means?
Yeah. Cash transactions, those are pretty straightforward. Money changes hands immediately, like when you buy a coffee with cash or a debit card.
Right, it's done. No IOUs.
Exactly. But credit, there's a delay between when you get the good or service and when you actually pay. Like buying something online with a credit card. You get the stuff now, but you pay later.
Makes sense, but I'm guessing that's important for how we actually record these transactions.
You bet. The timing of payment, whether it's immediate or delayed, makes a big difference in how we record things. But before we get into the nitty-gritty, let's move on to some real-world examples of how these journal entries actually work.
Okay, I'm ready to see those examples. Starting to understand how these little entries are the building blocks of a business's whole financial story. I can't wait to see how it all comes together. Okay, I'm ready to see these journal entries in action. I feel like we've got a good handle on the golden rules and that whole cash versus credit thing now.
Absolutely. Those are key. Let's look at those real-world scenarios from the article, like a manufacturing company buying a big piece of machinery on credit.
On credit, so they're not paying cash right away. This is where it gets interesting. Like there's a whole strategy involved.
Exactly. Imagine they're buying a $50,000 machine, but they've worked out a 60-day credit period with the supplier. That affects their cash flow right now, but it also tells you something about their relationship with the supplier and how they plan their finances. Sharp investors would pick up on those details.
Wow, so much to learn from one transaction. How would you actually record that in a journal entry, though?
All right, so remember the golden rule for real accounts. Debit what comes in, credit what goes out. Here the machinery is coming in, so we debit the machinery account for $50,000.
Okay.
But they're not paying cash yet, so we need to credit something else. That's where accounts payable comes in.
Accounts payable, is that like a list of everything the company owes?
Exactly. It's their short-term liabilities, the money they owe to other people. We'd credit accounts payable for that $50,000, showing they owe that to the supplier.
So it's like saying, we got the machine, we'll pay you in 60 days. It's all out in the open.
Right. And this is where those particulars we talked about are so important. In the description, we'd say it's a purchase on credit from that specific supplier, so it's super clear.
I'm starting to see how these entries create a trail, a whole story of what the business is doing.
You got it. Okay, let's switch gears. Imagine a retail store selling stuff for cash. Say they sell $1,000 worth of merchandise. Customer pays on the spot.
Okay, so that's more straightforward. Cash coming in, so we debit the cash account for $1,000.
Right.
And they made a sale, so we credit the sales account for the same amount.
Perfect. You're a pro at those golden rules. That simple entry, well, it shows a core part of any business, making money. And it updates both the cash and the sales figures right away.
Okay, let's do one more scenario from the article, paying rent. We talked about this with the golden rules, but how does it work in real life?
So the company pays their monthly rent, $2,000 by check. How would you record that?
All right, let me think. Rent is an expense, so debit the rent expense account for $2,000. And since the money is leaving their account, we credit the bank account for the same amount. I feel like those golden rules are stuck in my head now.
That's great. And as always, that narration, that needs to be clear and specific. We'd say it's the rent for that month, all the details right there.
I'm seeing how all these entries, even the small ones, they add up to a big picture of what's happening in the business. It's like weaving a tapestry.
Exactly. And just like a tapestry, the whole thing depends on each thread being accurate. Any mistake in an entry can mess up the whole financial picture.
Makes sense. Shows how important it is to have good accountants and systems in place. But beyond just getting it right, what's the big picture? Why should anyone care about journal entries if they're not an accountant?
That's a great question. It's way more than bookkeeping. Journal entries, they're the foundation for those financial statements that everyone uses to analyze how a business is doing, making decisions, even deciding whether to invest.
So you're taking all those little transactions, organizing them, and then stepping back to see the big picture.
Exactly. Journal entries are like the raw ingredients.
Right.
And the financial statements are the final meal. For example, you've got the profit and loss statement that uses all the revenue and expense entries and tells you if the business made money or lost money over a certain time. The balance sheet, That shows the company's assets, liabilities, and equity at a specific point, like a snapshot of their financial health. And then there's the cash flow statement that tracks all the cash moving in and out.
Wow, those little entries turn into such powerful information. It's almost like magic, turning data into financial gold.
And just like magic, it takes precision and understanding. That's why getting the journal entries right is so important. They're also like the backbone of any audit. Auditors use them to check that the financial records are accurate and complete, making sure everything is by the book and follows the rules.
So it's not just about making decisions internally, it's about being accountable and transparent to the outside world.
Exactly. Journal entries are the proof, the evidence that supports those numbers in the financial statements. They help build trust with investors, lenders, and regulators, making sure the financial story is the real story.
It's like a logbook of every financial move, so everything can be traced and checked.
Great analogy.
Yeah.
But beyond all that, the real power of journal entries is that they tell the story of a business. By learning how to read them, we can understand how the company operates, how profitable it is, how its cash flow is, its overall financial health.
It's like you're learning to read the secret language of business, decoding those debits and credits.
You're getting it. And remember, this isn't just for giant corporations. Every business, no matter how small, benefits from good journal entries. Freelancers, small business owners, CEOs of huge companies. Understanding this stuff can make a huge difference.
So it's not just for the accounting experts, it's for anyone who wants to be financially smart and make good decisions about their business or even their own personal finances.
Absolutely. And as we wrap up this part, just want to emphasize that we've just scratched the surface here. There's so much more to learn, but I hope we've given you a solid starting point and made you curious to learn more.
Definitely feeling a lot more confident about navigating this whole world now. We'll be back to wrap things up and explore some final thoughts about the power of journal entries. Stay tuned. All right, welcome back to the final part of our deep dive into journal entries. I gotta say, what started as a bit of a mystery for me has turned into something pretty fascinating.
It's been great to see how quickly you've picked this stuff up. You definitely have a knack for the financial world.
Well, you've made it all so clear and engaging, so thank you. Before we close the books on this episode, though, what are some key takeaways for our listeners?
Well, I think the main thing is to remember that journal entries aren't just about writing down numbers. They're about telling a story,
Right.
like a financial narrative that shows how a business really works.
It's like reading a financial novel, huh?
Yeah.
With each entry adding a new chapter to the plot.
Exactly. And the better you understand the language, all the ins and outs of those debits and credits,
Yeah.
the more interesting that story becomes. You start
Mm.
to see the connections, the cause and effect, all those decisions that shape a company's financial future.
It's like those choose-your-own-adventure books, right? Where each choice leads to a different ending. Except in this case, those choices show up in the journal entries, and they're shaping the whole financial path of the business.
That's a great analogy. And just like in those books, some choices are better than others. That's why understanding journal entries is so powerful. You get the tools to evaluate those choices, to figure out if a business is healthy, make smarter decisions, whether you're an investor, a business owner, or just someone who wants to be financially savvy.
It's like having a financial superpower, decoding all those secrets hidden in the numbers.
And with great power comes great responsibility.
Yeah.
Accuracy is so important here. Every entry has to be correct.
Right.
Even a small mistake can snowball into a big problem, distorting the whole picture.
Garbage in, garbage out, right? It really
Mhm.
shows how important those golden rules are, those principles we talked about that make sure every transaction gets recorded the right way.
Absolutely. They're like the guardrails,
Yeah.
keeping everything on track. But beyond the mechanics, I hope our listeners have gotten a sense of how everything is connected,
Yeah.
how every single journal entry contributes to that bigger picture, a financial tapestry that tells the story of a business.
Like realizing that even the smallest thread can change the whole tapestry.
And just like a tapestry, the beauty is not just in the big picture, but in those individual details too, the craft that goes into every element. Same with journal entries. How carefully they're recorded, how clear the descriptions are, the accuracy of the numbers, that all adds up to a financial record that's both informative and insightful.
It's been a cool journey going from feeling a little intimidated by accounting to actually getting how powerful and elegant it can be.
I'm glad to hear that. And remember, learning about finance is a journey, not a destination. The more you learn, the more power you have.
I think our listeners are ready to go out there and decode those financial stories, see the world with an accounting lens.
Absolutely. So go explore, ask questions, and keep learning. The world of finance is full of amazing discoveries.
And on that note, we've come to the end of our deep dive into journal entries. We hope you've enjoyed the exploration as much as we have. Until next time, keep diving deep.